is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go. Welcome to the nest.
See you on the show.
I'm running out of time. Ladies and gentlemen, welcome back to The Roll. It is Wednesday, August 19th. We are live from the Tokenization Tower, The Nest, broadcasting live from the financial capital of the world. It is a lovely Wednesday, August 19th. The bottom is in. Shorts have been blown out. $1.12 billion of liquidations in the last hour. I'm Andy. We're here with Rob, guys. We're streaming on the X accounts. We're on the YouTubes. We're fired up. We got green lights everywhere. Give some love to the production team behind the scenes. Alex, Megan, Co, doing amazing work. Nero, Leo, Marcelo in the back, cooking hard to make this show possible. Guys, what a day. Rob, how much are you up today? I mean, you got to be up six figures today just on this morning. I mean, come on.
Good morning to you too, Andy. It's a green morning across the board. I mean, what are we even doing here? I mean, is this what? Haven't we been talking about this? Haven't we been saying that this has been the pre-bull? Haven't we been saying that the market is going to pump off the lows and everyone is going to be left sidelined? Accumulate. That's what we've been talking about here. I mean, what better way to solidify a bottom than the Treasury Secretary of the United States saying that they're going to make at least $4 billion in bond purchases? Yeah. That is as QE gets. That is literally taking bonds off the books, serving liquidity to the markets. Money printer is on. We are so back.
That was some stealth QE. That's the most QE thing we've seen in a long time, right? We've been in this interest rate hike environment. Now we're kind of in like this no rate environment. And that was like a little glimpse into what's coming and what that means for your hard assets. Link Toad, great to see you. Great. One Arm Bandit, good to see you. Woke up in a good mood. Quantum Rose, yeah, us too. Omega Candle on Bitcoin. OG Killer, great to see you, man. We've been hammering it. Glad you're here. Hype to 100. Take a look at NetNet on Robinhood, gents. Link Toad. Link Toads and Marines, congrats on the state of Wyoming transitioning to you guys. And then Nevermind today as well. You guys are, over $15 billion of transfers from what you guys call legacy infra providers. Big congrats. $10 Chainlink today token. Congrats there. Yeah.
Very cool. Yeah. I mean, there's just so much that we can go on here. Obviously, the big news.
I mean, where do we start?
I think the most, the thing that, like, if we want to look at why Bitcoin is up almost 10% today, why is the market green across the board? Why are we pumping so hard off the lows? You want to start with the macro. I think this is just pure money printer turned on. Debasement trade is back on. The liquidity injection is back. And it's happening at the Treasury level rather than the Federal Reserve level. I think that is the most clearest indication of why we're up and green today. I do think that the SEC has, this reg crypto stuff. The White House is meeting with some leaders in finance and technology today at 2:30 p.m. We're going to hear more about that. There is a confluence of factors, but there is just absolutely no doubt that the yield curve control and the liquidity, I'll use the exact terminology, the liquidity support is why the market is so green today. And that's just what we're going to focus on. And then we know that this program that got announced is going to continue until November 4th. So
this long-dated bond purchases.
Bond purchases
Bullish, man.
of at least $4 billion in every treasury auction is going
is
to
like the
happen from
beast
now
ball was
until
underwater.
November 4th. And the people are saying on November 4th it's set to expire because they're going to increase it even more on November 4th. It's not going away. It's going to be, there's going to be additional liquidity support that's injected into the bond market from November 4th and beyond. So
are you guys having fun yet? Guys, we have an amazing show for you today. We've got Mert and zkDragon. zkDragon is one of the lead devs of Zcash. Mert, obviously, his ZK bags are probably worth more than 3 mansions in California. We're going to talk what's happening there. Things up 10% today. We had Ironwood get through successfully. A lot of the Orchard pool has moved into Ironwood. That's bullish. We got him and zkDragon. Then we got Terence of TechDollar here in the tokenization tower talking about what's happening there. And then we got Will, the CIO of Cypherpunk Technologies, who just announced the largest mining pool for Zcash, 16% of the hash rate. As always, guys, we're here at Tokenization Tower. We're powered by our friends at Plume and their on-chain asset management infrastructure products. Guys, check out plume.org to learn more. I was telling the CEO today that they're in a multi-month bottoming formation, looking like a double bottom there at the lows for the old guys at Plume. So looking great. Edward says 80K by tomorrow, 90K by Sunday. SEC drop rules. Rotation out of AI and into Bitcoin and gold because we're printing. I think this is also like something that needs to be talked about, which is that, you know, we are seeing this absolute explosion of capital into AI and tech, right? It's been like unprecedented. Money going up, these big IPOs coming. You could argue we are closer to the end of the beginning of the AI infra bottleneck trade than we are closer to the beginning of that.
I agree with that.
That capital would have to come somewhere, right? That capital has to go somewhere. And I think we're seeing the earliest innings of some sort of rotational capital. If you look at stocks, S&P and the NASDAQ today, they're not really reacting to this news as well as hard assets are. Gold, silver, Bitcoin, crypto. These types of more like monetary hard assets are reacting a lot stronger to the easing news from the Fed and from the Treasury than tech stocks. And so I think there's something there to note. So guys, we've got a great show. We got merch, we got the whole gang. Let's get into it quickly into a couple of our segments, and then we're gonna get Mert and the guys up. Before we do, let me tell you about Denari, building infrastructure for tokenized US equities and bringing real-world stocks on chain. To explore SpaceX on Hyperliquid and more, some of the best spot liquidity, visit denari.com to learn more. Guys, it's a beautiful day in New York. It's 89, sunny. We are literally right there in the middle of that building in the Empire State. It's beautiful. It's warm in here. You gotta love it. It's a hot day for a hot market. Let's keep it rolling. I'm sure it's warm down there in Florida. Let's get into the markets. I know we just started this, and then we'll get Mert up. Before we do, let me tell you about Frax, our premier stablecoin partner, open, stable, and borderless. Visit frax.com to learn more about their FraxNet product they just launched. $1 in, $1 out. Some of the coolest yields on chain for dollars and more. So markets. So Rob, this is obviously what we've been opining on. S&P, Dow, and NASDAQ only up about 1% or about 0.5%, 1/3%, 0.5%. Treasury says it's going to more than double its long end of the yield curve buybacks. Oil is up a little bit. Bitcoin's flying. Bitcoin's at almost hit 70K. It may hit 70 on this show, 68.3. All of these things are up 5 to 10% today. And again, it's a sign of the fact that hard assets are reacting much stronger to the bid and this kind of changing of the monetary policy than kind of tech stocks or stocks in general. We'll see how long this lasts, of course. But I mean, there's a lot of sleepers here. There's a lot of people that are not listed, or a lot of tokens that are not listed on this chart that are doing very well. Yeah. Lighter's doing fantastic. Zcash is flying. Near's flying. EtherFi's flying. I mean, I can just go down the list. I mean, everything is green. Finally, that per position that you guys have been that I've been riding on for so long. I'm so close to being above water. Pump, ripping. Frax, Plume, Venice, Zama, Chainlink, Aerodrome, ripping.
Yeah.
Just a green market today.
I mean, the market is now going to shift from capital preservation to capital appreciation. And I think that means our conversation is going to shift into one of outperformance. There's been some outperformers. There's things that, had quite a little run in what we were calling the relative strength trade.
Yep.
We also called it like a secular bull market, where there was sort of this AI crypto, privacy crypto niche that did extremely well, in addition to the revenue meta, which has done well in terms of capital preservation, as well as, kind of the secular bull market. I think part of the thesis going forward now is that the outperformers will continue to outperform. I do think there's, a bigger question about outperformance. We obviously have, taken an interest in sort of two classes of tokens in this market.
Yep.
One of those classes of tokens being those with monetary premium. And so there's really only two, maybe three coins, if you want to put them in there, into that bucket. It's Bitcoin, it's Zcash, and maybe it's Ethereum, just because people like to make that argument, but we're not going to make that argument here.
Yeah, they love to do that.
Monetary premium is something that is going to catch a bid extremely well because of this debasement trade that is back on. So we're seeing Bitcoin, Zcash, and gold really do, exorbitantly well as a result of this liquidity injection from the treasury.
Yep.
The other class of tokens is that we believe is going to continue to outperform is the revenue meta. It's the class of tokens that aren't just generating revenue, but are accruing value. That revenue is accruing back to its token. So that's what we're continuing to watch. The monetary premium thesis, I think, especially now, is the easiest to underwrite, because Bitcoin and Zcash are just ripping off the lows. Zcash is pushing highs, almost $600. And so that class of tokens, because it's so few, the wealth effect is going to be extremely concentrated into that class.
Zcash looks ready for all-time highs. We're going to hear from the guys.
Yeah. And then there's obviously a lot of room and to explore within the revenue class of tokens. And I anticipate we're going to continue having these conversations around buybacks, these value accrual mechanisms, these revenue drivers that we're seeing in some of these on-chain businesses.
Yep.
And we're going to talk about, what some of the companies that are doing this the right way, what are they doing? Who are they?
Yep.
And, how more companies can ultimately right their ship and get into, this one-way train of the K-shaped token economy, this class of tokens that is going to continue to outperform.
Yeah, I agree. We're kind of thinking of it as like a barbell. You got, the on-chain businesses on one side. We've spoken about them tirelessly. We'll keep speaking about them. And then you've got the store of value. You got this kind of middle bloat of all these older L1s, older L2s, older infra, older kind of applications that aren't really doing a whole lot, that don't really need your attention, in our opinion, or your bid. That's just kind of like how we're thinking about it. It's like your attention and your bid is finite. It's a valuable resource, your time, your energy, your attention, and your capital. So all we're saying is we think there's two core areas to maximize your attention and your bid. And with the store of value stuff, you don't really need to have that much attention. You just need to have the bid and the kind of cojones to hold, right? Longer term, and just try not to sell, try not to sell. On the businesses side, this is where you need a bit more attention and bid, because it's a bit more of a selective bid, in our opinion, right? So, for example, Pump was just highly undervalued and doubted. And so you had to be seeing that trend start early, about 2 weeks ago, and be bidding on that, right? And then EtherFi is kind of, you have to have your attention on the fact that it just had its earnings call, and that they have all this amazing business growth, and that, the token's starting to break out a bit. Same thing happens in Near. Lighter's going through like the second stage now. Hyperliquid's on like the fifth stage of this. So the on-chain business part, you kind of need a bit more attention and your bid. And then on the store of value, I think it's really just get the bid in there and try to just not look at it.
Right.
So
now we have momentum, and now we have flows. And so I think now we're going to see, something start to catch a bid. There's going to be rotational trades both inside and outside of this industry. I'm already starting to think, and actually Jim Cramer, of all people, put out a tweet, which didn't make it into the docket. It was just before we started, but he said Besson is going to he's going to buy the long end at a discount, which is what he did today, and then he's going to sell the short end at a premium. And I think this is going to have significant impacts on stablecoin businesses, the entire stablecoin sector. And so we're going to start to see these, these sector shifts, right? Where I do think that there's going to be a rotation both of narrative and flows, and we're just going to continue to watch, how these things are interrelated.
Yeah, love it, man. Love it. All right, guys, we've got first two guests of the show today, Mert and Dev. Dev's first time on the show, zkDragon, hell of a handle. And Mert, of course, Zcash is up 10% today. People are waking up. I think a lot of people are sidelined on Zcash right now, though, because Rob, explain what happened with the whole FUD thing real quick for some context and why we think a lot of people are still sidelined here.
Yeah, we've bounced back to Ironwood Orchard Pool levels. There wasn't, and this is just some pre-context here before we get our guests up. I think they're getting ready in the back, which is that, we had this movement inside of Zcash to investigate the protocol using some of the most advanced AI technology out there. And so, there was not any sort of vulnerability. There was no exploit, no counterfeit Zcash created, but there was a movement to start to throw this AI technology at it to try and preemptively discover any potential exploits, any potential vulnerabilities. And so people took that as, what if they find something? Right. And there was a lot of fear in the market. There was a big sell-off, and that just kind of cascaded as more information about this came out. But then that sell-off recovered extremely quickly. I think, we went from the 500s down to the 200s. Now we're back 550 and more. And so in response to that, right, there was this turnstile accounting method that was implemented. We've talked at length about this on the show, and ultimately it was discovered that, hey, this new pool, we're going to migrate from the Orchard pool to this Ironwood pool. It was a big build out. Team moved extremely quickly, had access to all the best, AI coding technologies, and then ultimately, rolled this out. As far as I understand, it's been a flawless launch. We'll hear from a couple of the guys in just a moment. And now we're in this process of migrating from the old Orchard pool to the new Ironwood pool. Last time Mert was on the show, he shared a dashboard which allowed us to track the flows from the old pool to the new pool. And so far, everything has gone exactly according to plan. There has been no counterfeit Zcash found. And as more Zcash moves from the Orchard pool to the new Ironwood pool, it becomes less and less likely with every Zcash migrated that there is a counterfeit Zcash that has been created. So I think that is the context for what happened for Zcash, the creation of the Ironwood pool in response to the Orchard pool. And now we're here where Zcash is basically one of two assets out there that is digital asset, and it is one of the few monetary premium assets that has that monetary premium narrative. And I think we're going to continue to see that momentum, shine through in the asset going forward.
Gotta love it.
We're going to bring up. Let's go ahead and bring up.
Thank you
Mert
for the context, Rob. Very dialed. Also, just some other context. There's just been so many Bitcoin OGs you see in the timeline. Alex Kruger and a lot of the OG traders, and Chris Berniski and older kind of OGs just really, really turning the tides from looking at this asset and being like, something's got to give here for the privacy side. So
obviously, and we can go ahead and bring up our guests. We're going to get into it because this is helping set the scene here. Obviously there was this new pool that was generated, and it was a technological upgrade for the entire network and for the asset. But there's also huge implications of privacy, confidentiality, shielding assets. We have the rise of AI, the collapse of privacy all over the place. And Zcash comes in as the answer to a lot of the claims that we have been seeing with issues in privacy as of late. So
Dev, Mert, welcome guys to the show. Great to have you guys. Mert, good to see you. Dev, welcome on.
Thanks for having us.
Dev, it would be amiss if we didn't give you a chance to introduce yourself to our audience. First time on the show. Would love to hear just about your background in engineering and currently what you're doing with Zcash.
Cool. So founded this company called Valor Group, which is basically just making Zcash scale, solving a bunch of bottlenecks to try to hit the dream of make this thing credit card scale under pure proof of work. So in 2 or 3 years time, you should be able to like pay, do 50,000 plus transactions, the same level of that MasterCard Visa hit, and get this all like sub-second. And in parallel, make this all post-quantum and secure. So this actually takes a bunch of work across the stack from the node software to wallets. Like the blocker for scale is actually the wallet side, not even the nodes. My background in the, is that I've been in the ZK space for like over 10 years. The first paper on how you do post-quantum recursion was from our group called Fractal, which is now kind of the approach the entire industry is doing on ZK. Go use binary fields, true or on, and do Starks. So nice turn of phrase, 10 years later, this is the consensus. Then I was part of the founding team for Tendermint and Cosmos, so kind of did everything across the stack to help make Cosmos as fast as it was. And then founded Osmosis with a couple other folks last 4 or 5 years. And here we are now, making Zcash scale.
Love it, man.
And so Dev, just to follow up on that, what was it that, basically pilled you or converted you? Obviously a big believer in ZK for a long time, but, had quite a tour and journey in the Cosmos ecosystem. Yeah. What sold you on Zcash? Why did you move over there?
So honestly, when people ask me kind of the entire time why crypto, it would actually always be this dream of private payments. And then you had a couple big problems. One, how do you bootstrap the stuff to work? You just have to you have to get people on chain to do anything for privacy to work. There's currently 0 users. Then you have to get things fast and have good UX, and you've got to solve a go-to-market problem. So first, when we started Osmosis, the question was, we've got 3 big problems left in crypto: scaling, privacy, and MEV. Well, we were like, okay, we kind of know everything we need to know about scaling. 2021. I put some asterisks, but I actually think that's directionally true. And scaling is like a lot of execution, but not new ideas, not insanely new ideas. Like Solana was already well underway of like the scale path. Then we had privacy and MEV. We thought the MEV crisis was a bigger problem in 2021. So that's where Osmosis started with. And then the plan was to always go into privacy.
Yep.
And then DeFi market pressures take you different places, and it didn't make sense to hit the privacy dream. And then we see that Zcash is working, and like the question is, if we want privacy to work, do we try to make a privacy layer on Solana, or do you make Zcash win? And I think that the better choice was make Zcash win, because as AI is accelerating, we need like uncompromising privacy, which means it has to be at the base layer. Hence, made the choice of like, let's go all in on making Zcash's privacy as good as it can be, like in the hands of everyone.
Love it. Well, welcome to the show. It's great to have you with Mert. Kind of the inspiration of today was just to get an update on post Ironwood. Mert, we spoke maybe 6 weeks ago or so, pre-Ironwood, and we kind of spoke about all the different, outcomes that were possible and what people needed to know. Obviously, now we're, post the upgrade, and there's a, whoppingly significant amount of Zcash having left the orchard pool, I think to the tune of 85+%, if not closer to 90% now. So we'd just love a kind of synthesize 6 weeks, what happened, what went well, what did you guys learn, and just kind of catch us up to where we are today post Ironwood, and then we'll get into more of the roadmap, into the more of the engineering, and just kind of what's on the horizon.
Sure. So yeah, I came on the show last time, but just to reiterate / bring people up to speed with that context, there was obviously a vulnerability found. That vulnerability that was found was a result of ramping up red teaming internal to Zcash, right? So a year ago, maybe even longer than that, at this point, it was pretty clear that AI was particularly good at exposing security flaws, and it just can look at more places more deeply at all times, right? It's obvious. And so Zcash got ahead of this by red teaming and doing audits internally and beefing up all sorts of efforts like that across multiple core teams, not just one or two. Obviously, Dev leads Valor Group. There's also Sean Bo's team, Tachyon. There's Shielded Labs. There's Zodal. There's now Zcash Labs, which got released since the last time I came on the show. So there's quite a few core teams, actually. That's quite underrated, I would say. I haven't seen that on any chain, this many core teams. So while doing that, of course, Taylor, who is a very specific domain expert on Zcash and related tech, found with, at that time, some of the latest AI tools, a vulnerability that would have allowed for potentially counterfeiting shielded notes in the Orchard pool specifically, right? So there was a lot of misinformation about this because people were not aware that there is a turnstile mechanism which basically ensures that only that pool would be affected and not the entire supply. And obviously that pool is a subset of the supply. And obviously, given that Zcash has been basically the only coin that really went up double digits, triple digits, or even single digits, to be honest, since the last year, it obviously was getting a lot of attention, both good and bad, which is good because that's where the edge is. And obviously, all sorts of rumors like, oh, they were just printing infinite money to give the KOLs, which of course would make no sense because then you would have to overcome infinite selling pressure as well as the shielded pool. And the shielded pool wouldn't go up in terms of aggregate size and all sorts of different inconsistencies. But obviously, the big trade-off in ZK or privacy in general is that there is this one trade-off for the auditability of the supply, right? Where if you have perfect privacy, by definition, there are some things that have to be private, right? Such as who holds what. And so that makes it particularly difficult to completely verify that supply. And so Zcash has boundaries like turnstiles around this. And that made it worse because then it's Twitter. And so the very definition of FUD, fear, uncertainty, and doubt, was the perfect sort of environment for this because you could just do uncertainty, right? You can just say it could have happened, it could have not happened. And so all the Zcash guys, Dev included, or Dev and Sean majorly actually, really helped lead everything, made the effort to formally verify. I think there was 2 or 3 in parallel actually, as well as work with Zodal to release this new pool. And this would make it such that once the funds migrate from Orchard to Ironwood, if the turnstile doesn't trigger, you can tell that it clearly wasn't, the vulnerability was not actually taken advantage of. We're pretty certain now, I mean like 95% certain, just statistically speaking, but logically speaking, I think I am 99.999% sure at this point. So that risk is pretty much gone. But then the more important thing, of course, is that how do you prevent this from happening again, right? Is this possible, right? Because as an investor, that's what you look at. You look at, well, could this happen again? Because there'll be more bugs. And Dev can talk more about this part because he's obviously the ZK god or the ZK dragon, so to speak. But we, the core teams have basically mathematically proven the soundness of undetectable counterfeit bugs, right? So the order of the magnitude of the risk that you're taking is now an order of magnitude less. And this is going to become even better. And this is going to become even better with the next shielded pool, which will be Tachyon, which will be quantum proof. So Ironwood is an upgrade in that it's not only formally verified and mathematically sound, but it's also quantum recoverable. Tachyon, however, will be quantum proof, which is a different thing, and Dev can explain that in more detail. But also it'll use, I believe, simpler circuit, simpler arithmetic, which will also reduce the types of bugs there that are possible by an order of magnitude, right? Less stuff, less moving parts, less things that can go wrong.
Yeah. Dev, maybe you could just give us a little bit of an insight on the engineering challenge it was to achieve the formal verification aspect, as well as, I guess, explain like on 5 how or why Mert is so statistically confident that there is no counterfeit notes.
Yeah. So on the formal verification, before, what would you have to do to trust Zcash? You'd have to say like, okay, there's a bunch of smart engineers somewhere who, okay, let's start with Bitcoin. How do you know there's only 21 million Bitcoin? Okay, you go run a full node and you say like, I'll just go count all the balances. In Zcash, okay, we can't go count the balances. So what's the next idea? We have a couple shielded pools, and we count, the amount of money that went into the shielded pool and the money that went out. This is what the turnstiling like words mean. You can start analyzing. A good analogy in your head is like, take a lending market. Let's say you have 2 different lending markets, one with 10 million USDC, one with 1 million USDC. There's a bug in the 1 million one, only 1 million's at risk. Similar idea. But now, within the shielded pool, I've deposited in there, how do I know my money's safe? Historically, you'd say that there's this like spec somewhere that a bunch of smart people wrote, reviewed, and really audited. And we just like know, because of all these audits and people are smart, that there's no bugs. Now, what formal verification did or has done is we have a mathematical proof that, hey, look, our implementation perfectly matches the spec. So Zcash has never had a problem where we've designed a wrong spec. The problem we had here was that the implementation had a slight bug in Orchard, or that took years or AI to detect. So now the defense we now have is that, okay, we've mathematically proven that the circuit you use, and we're checking on every single transaction, implies exactly what you want. But a spec is like an ambiguous term. It's actually kind of simple. What you're proving boils down to a simple claim. If there's a payment and the proof passes, that means that someone owned some nodes, and then the total input of the transaction is equal to all the outputs. So if you spent 5 ZEC, there cannot be more than 5 ZEC out. And that's kind of all we have to prove here. But this, and so this kind of solves the big scary risk of, could there be a second bug? No, because that would mean that this like mathematical proof engine is false. And mathematical proof engine sounds also like this ambiguous, scary term, but it's kind of just composite logic of, let's say that you say, let's say you had a rule that all brown dogs are nice. Sally is a brown dog. Okay, that implies Sally is nice. Like, formal verification is just doing that at a large scale. Like, it's not some like big scary thing. It's just a lot of tedious work once you have like millions of conditions. So we have that proving that, like, look, this ironwood pool is sound. There's no counterfeiting as long as your cryptography assumptions hold.
Yeah. And so you've effectively cleaned up a lot of the potential inconsistencies in the code base. And now that is kind of behind us. We've talked at length about, this potential vulnerability, this turnstile method, and now the migration from the Orchard pool to the new Ironwood pool. And it seems like it's going extremely well. I think everyone sort of now has their eyes set on Tachyon. Yeah. Obviously, quantum is a unresolved problem in the Bitcoin ecosystem. And there's this sort of overarching theme, at least philosophically, socially, that there's this migration from Bitcoin to Zcash. Mm-hmm. Mert, I'm kind of curious if, you think that there is still this ongoing migration from Bitcoin to Zcash, philosophically, and then also maybe, from what you're seeing there on the ground. And then I'd love to just dig in a little bit more into Tachyon. Is it primarily this quantum focused, proofing? Is there other components to Tachyon that you think are, worthy of note, expanding the ecosystem? And is this the primary piece of work that all of these labs, companies, and contributors that you mentioned earlier, are they all focused on Tachyon, and what are they focused on in particular?
Sure. So the first question about migration. So the good thing about Zcash, and what a lot of people don't necessarily understand if they're not, let's say, if they're on CT, is that Zcash is still, relatively speaking, a tiny asset, even in crypto. I mean, I believe Dogecoin is above it. Obviously, like, it's barely in the top 10. Last year was barely in the top 100, or a year and a half ago at this point. And so there doesn't even need to be a migration from Bitcoin to Zcash. It can just be 5% of people putting some amount of money from Bitcoin, and that'll already be noticeable. And so if you just do that for all the ecosystems above it, which by the way is happening. I mean, one of the things I used to say when this run started was that privacy is the last PBE, in that it doesn't necessarily interfere with really anybody else's goals except for potentially Bitcoin, right? Which is to say, I still run my company on Solana, but on a personal capacity, I hold Zcash. I try to help wherever I can. I'm talking about it right now. And that's because what Solana aims to do is completely different than Zcash. Same with really all the major chains, except for Bitcoin. And Bitcoin, I think there's multiple schools of thought, but one is that why would there just be one store value asset? Why would there be one money in a digital sort of atmosphere where it doesn't cost anything necessarily? I mean, there's the proof of work cost, of course, but there is no reason to get zero sum, especially at this point in time, right? And so certainly there have been some individual migrations of people who have gotten disillusioned with crypto and Bitcoin. I would say, for example, I migrated to an extent. I mean, I used to hold much more Bitcoin than I do today. I still hold some, of course, but the point of what I'm trying to say is that it's a tiny asset and it's a PBE. Everybody needs privacy. It probably is the closest thing to the Cypherpunk ideal of crypto from the early days still out there today. It has real utility and use. And it's the one market where competition is really not that fierce, in my view. I mean, everybody's trying to be like a trading app or a launchpad and all those different things, but who's trying to be private money exactly, right? And it's a network effect as well, right? Because it's very hard to compete with the anonymity set as it keeps growing, right? Like, how are you going to siphon liquidity? It's going to be very difficult. Anyway, so that's all to say, certainly there's people, as more people, for example, my real estate agent, and he already bought some. It was a very easy sell. I didn't even have to sell him. I just told him what it does. And he's like, oh, that's interesting. Okay. And then now he's already up 10%. Of course, they can also go down, but I never told him like this will moon or something. I just said, this is private money. It's useful for such and such. He's like, okay, that seems useful, right? So I think it's very dentist proof, so to speak. And a very simple idea can always spread much more than people think on the internet. In terms of Tachyon, I'll let Dev talk to the more technical aspects. It's obviously there'll need to be some coordination across all teams here, but fundamentally, the Tachyon team itself is, or the Zakura team, I believe. Dev can correct me if I'm wrong. There's two teams that are obviously taking more of a lead on it, but it's Shanbo's project fundamentally. And it'll have quantum proofing, but it'll also help reduce the state growth problem, so to speak, or the nullifier problem more specifically, which is to say it'll pave the way for scaling Zcash more.
Yep.
And Dev can talk about the specifics on the performance end there.
Yeah, so we're kind of doing four things in the quantum in Tachyon upgrade. On the quantum side, we're making it all quantum private. So today, like what we did in Ironwood is your funds are safe if you hold it in Ironwood, and like I don't know, you go into a coma, come back 20 years later, your money will still be there. Like you can now move it out of Ironwood into the new quantum pool in 20 years post quantum computers. There's a second problem, which is that Zcash did a bunch of work to like limit the privacy leakage of quantum computers, where like things are only concerning once they know if someone with a quantum computer knows your address, and even if they know your address, they don't learn everything. They learn like they just learn about payments you receive, but nothing about payments you make. But this is kind of complicated. In Tachyon, we're just going full post-quantum privacy. There's no conditionals. Everything you do cannot be learned by a quantum computer at all. Well, improves a lot of things and causes a bunch of technical problems on both the wallet side and chain scaling. So first goal, quantum privacy. Second goal is scale. So we introduce recursive zero knowledge proofs into Zcash. what's kind of funny is like 2017 era, when we're doing this fractal post-quantum recursion, you have this explosion of recursion techniques, and Sean Bowe, co-founder of Zcash, made one that's actually now kind of the standard in most places. It's commonly known as accumulation, which I got rebranded to folding, whatever. That's now going to be live in Zcash, which acts as a massive scale improvement. Transactions go down by over 5x in size, but even more interestingly, node processing time goes away as a dimension, as like a thing you have to worry about, as does like state size. So the only bottleneck to scaling Zcash is then just going to be consensus and wallets. Sorry, the bandwidth of consensus. But like compute fully eliminated, state size fully eliminated. So that's the second big goal. Oh, go.
No. I have a separate question. Please continue.
Okay, the third one is a privacy upgrade to a bunch of metadata leakage, where there's some like nuances where privacy is really hard. If you can't get, you should have zero leakage, and this works for basically all users. Except for like weird edge cases, like you do a multi-sig, or like you start signing a transaction, but your internet cuts out for an hour and you don't re-sign it. Like you can imagine a bunch of weird edge cases like that. And those edge cases, all they do is they leak, hey, you had an edge case. Well, Tachyon kind of solves that. No, we're not even going to leak that anymore. Yeah. Oh, I combined the two Tachyon scaling.
Okay.
So yeah, that's the big improvements there.
Okay. So Tachyon is inclusive of several privacy upgrades across the board, as well as the quantum proofing that we've talked about.
Yeah. Oh,
and the performance side, right?
Yeah, the other big one's wallets. I don't know if you ever use a Zcash wallet. You have to go through like stupid syncing thing. Yep. And like it works.
Your balances don't show up, and you start kind of freaking out for a second.
Yeah, what I was doing right before the call was got this like 6x faster, but
nice.
It's still like this still shouldn't be a problem at all. So when Tachyon, we switched to a new way of wallets working. That it's kind of a bit of a long segue, but this is fundamentally gone. Today, if we had 1 million transactions, you'd have to scan 1 million things. In the Tachyon world, it's O of 1, no scanning at all.
Got it. So Cameron Winklevoss put out a tweet claiming that Zcash is, I think, the one and only quantum resistant network. And then he got a lot of pushback from people in the privacy space who were like, no, it's not quantum resistant yet, right? And so this Tachyon upgrade, by and large, from both of your standards, is the defining moment where that claim from Mr. Winklevoss can be said as a completely blanket statement and be verifiably true. That is like the mega kind of big upgrade here.
So I think it's a little bit more nuanced. One of the biggest things about quantum is a commitment to a plan. In Zcash, this has been clearly there from a long time ago. Okay, let me rank the problems of quantum for quantum. Number one is commitment to a plan. So look, everyone knows there's a plan, and there'll be upgrades in time. In Bitcoin, this is still kind of unclear. Yeah. Are we adding a new signature? What are we gonna do? So then we have a second thing is, can you just hold funds for now and be safe? Like for like 20 years. Like, can you hold funds and go into a coma for 20 years? That is solved in Zcash. So 1 and 2 are both solved. In Bitcoin, that's not. You'd have to do these weird winter knits. Well, you have to change a signature scheme to get any hope. And you have like a slight asterisk of, if you use an HD path and Bitcoin one day decides to freeze all non-post-quantum funds, you could do a ZKP. But provably, Satoshi's coins don't follow that. So Satoshi's coins would be stolen. So that doesn't really help you much. In Zcash, this whole quantum recoverability thing that's shipped in Ironwood fixes that problem. Go to Ironwood, you're safe. The third layer of quantum protection is privacy. Well, for Zcash, it's privacy. We did a bunch in Orchard, so you have a lot of things are safe, but there's still this like asterisk of there's a slight leakage if your address is leaked for some payments you receive. In Tachyon, that's fully gone. In
Yep.
Bitcoin, the standard is everything's public, so they don't really care about that. Then the fourth step is that is there any more quantum upgrades that have to exist? So Zcash will have one more quantum upgrade after Tachyon, but this one almost doesn't matter in that you shouldn't care if that came the day before quantum computers came out, because we just freeze the old pools and all users can safely move over to the quantum one. So I rank these as like that's the priority order and how quickly I need to ship, and we're already through 2 out of the 4, the 2 most important. The third most important one comes out in a couple months.
Mert, anything to add there, just regards to the kind of quantum secure kind of marketing or narrative here?
What do you mean by like
Just kind of
anything
like
specific?
thinking about these things in phases, as Dev says, with regards to kind of labeling Zcash as being post-quantum secure.
I think the thing with quantum is I think there's pretty wide consensus that it's going to take a long time to actually arrive. Perhaps AI speeds us up to an extent, but there's always the physical layer which you just cannot necessarily speed up, and that's generally where most of the bottlenecks are in terms of error correction and all sorts of different things. But I think the most important part with quantum in regards to a store of value asset is the lack of surprises, right? So the entire point of a store of value is that it is a low entropy asset in a high entropy channel. So one way of thinking about this is that if a country's currency is extremely volatile, right, then all the commercial activity in that country for that economy is unstable, and you can't price things correctly, and you can't save, you can't invest. It becomes extremely chaotic. Or maybe a non-monetary example is, even on this call right now, there are low entropy carriers like antennas and fiber cables transmitting the high entropy message, which is literally my voice and the bits encoded in that. And you can only get signal from the difference of those things. And so if you have a very highly volatile asset or a high entropy asset, then it fundamentally cannot be a store of value, because store of value requires no surprises, right? It requires that if I put my money here, it'll still be around in 5 years. Sure, I don't control the price, but there won't be tail risk, right? And so with that is all to say, the important part about quantum is that you must have a plan and a concrete timeline such that you can reduce that risk in the investor's mind, right? And so the worst thing you can possibly do, in my view, is completely brush it aside, because then you're like, it's a very it's a horrible trade, because best case scenario is that quantum is delayed, but you're at least ready for it. Worst case is that everything is hacked, right? And so one path leads to ruin, one path leads to meh, right? So if you're opting into the ruin, that is a bad trade in my view, especially because Bitcoin is $1 trillion asset and there's so many different minds on it that it seems to be very unwise to me to not prioritize it, at least within some groups. And so I think, yeah, go ahead.
I mean, this is a fundamental issue with decentralization, and the lack of coordination amongst decentralized contributors. And so maybe you were kind of starting to lead into my next question here, which was like, how is Zcash organized? Why has Zcash contributors been able to reach consensus and ultimately implement these things into the protocol, whereas Bitcoin hasn't?
Well, one thing is, I think one of the main fallacies in crypto is conflating decentralization with being uncoordinated. Like decentralization, people assume, given past experiences, must mean disorganization. But with any project, fundamentally, there needs to be a unifying, cohesive vision, right? And decentralization actually just means coordination without the middleman, right? And so you still need to be able to coordinate, but the coordination has to be around the fundamental ideals and values of that project. And I think one is obviously Zcash is smaller as a project, and so the message can spread and be more unified. But two is that again, this goes back to the simplicity argument. It just has to follow that a store of value has to be ready for surprises such as these.
Yeah.
But also there's also the expected value argument here, which is that Bitcoin people have this risk aversion now which actually in itself is a risk for them, which is to say, well, we got to $1 trillion or $2 trillion. So now we just have to keep doing what we were doing before. And then it's a misinterpretation of history that they think will lead to something different, or that will lead to the same consistent repeated results. But of course, that is sort of like the innovator's dilemma in some sense. It doesn't necessarily, that gives people like or projects like Zcash the chance to actually improve on that. I do think Bitcoin will be ready for what it's worth by the time quantum comes. I think it would be unless there's like a major exponential breakthrough, or like maybe a few of them, it would be hard. But again, that is all to say, my main point going back is the most important thing in the Ironwood migration and the tachyon and quantum proofing and recoverability all tell the same story, which is that it's fundamentally designed around hardening it as money, right? As a store of value, low entropy asset that people can trust in.
Yeah.
One thing Zcash uniquely offers is that you can hold this right now and you don't have to do an update to be safe for quantum computers. I think that's like one of the interesting things. Like that's the result of having a plan. On coordination, I think like the Zcash community has been rallied around. You have to take like unifying principles. Privacy matters. There's security is critical. Well, and then we want this thing to be usable for ZEC payments. Like I think these are like pretty consensus. And it goes back to the very first Zcash announcement post that we need a culture of updating in order to get there. Where Zcash launched pioneering zero-knowledge proofs, it was obvious to everybody that like, hey, look, this first thing we're doing is not the end state, and we're constantly going down that path of everyone understands that like we're gonna have to keep updating the cryptography because we pioneered ZK. Now we have to go like deploy post-quantum ZK, this new thing called private information retrieval, whatever. So the culture of stagnation isn't there. It's but the people are mindful of don't update things that should never be updated, like the happening schedule or whatever.
Yeah. One of the things that just recently came out that's all aligned with this kind of decentralized kind of network coordination conversation, also in accordance with this idea of basically reaching this, multi 100,000 or multi-million TPS eventually through the future upgrades, is the primary Zcash digital asset treasury company, Cypherpunk Technologies, announced, and we're gonna have them on the show here in an hour. They announced that they've set up a massive mining organization up to 16%, I believe, is what they claimed, of the Zcash mining hash rate. And of course, over the last 6 to 12 months, we've seen a lot of mining from crypto, just typically, bear market thing, but also in this case with AI, shifting towards providing their GPU power and compute for inference, right? And so, Cypherpunk Technologies comes out and said, look, we're going to put this much capital and effort and machines towards mining Zcash. Does that change anything for you guys? Does that make the network stronger, more centralized due to a strong amount of or a large amount of the hash rate in one organization? Does it help the potential scaling, as you were saying, with the kind of consensus and the hardware part potentially being removed from the question in the future upgrades? Just like general takes, and how does this kind of new power to the Zcash hash rate and the 16 or so %, how does this contribute to the decentralization of the network and the future upgrades?
It's pretty big for decentralization. I think a misconception people have across all of crypto is what is decentralization at the consensus layer? So, Ethereum markets, we have hundreds of thousands of validators. No, hey, if you take the top 5, you're already at 60+%. In proof of work, it's a little bit more honest of you have these public trackers of the number of mining pools, but you still don't see like the breakdown of where miners are, which company owns them, Foundry, now Cypherpunks, Chinese miners of the world, etc. But it's actually pretty. Whenever you do dive in, it's smaller than you'd expect, and all the security arguments need rest on it being like tens. But there's huge what do you call it? There's huge advantages of scale, which is why mining it's way more cost efficient to operate a warehouse of miners with cooling solved versus some in your house. So Cypherpunk being in here like adds an extra one extra miner, and they're also an active participant in governance. Like they hold a ton of coins, so they're it's very easy to see their opinion on stuff, which because they go post it every single vote. So it's actually really easy for big improvement for vision of Zcash of like, okay, you have a public, you have a company who has public stances on all its voting stuff, and we have another big miner. Like the question is like, how many big miners do we have before? Was it like companies, 4 companies? Well, we know for sure, no matter what, it's now one higher than what it was before.
Yep. Love it.
Guys, I think we're getting a little bit tight on time, but obviously this has been like, we're big believers in Zcash and the private money thesis here. I'm just curious for anyone who's, just kind of starting to get into the ecosystem, a little bit unfamiliar with Zcash itself. Can you give a quick crash course in kind of the tokenomics here? Like there's 21 million fixed supply, it's proof of work, like, is there a halving schedule? What does the inflation look like? What does the token distribution look like at a high level? Is there a, community fund that is funding all of these disparate contributors? Maybe you guys could just walk us through some of the basics here.
Maybe I can do high level and then Dev can do specifics.
Sure.
High level, mimics Bitcoin. Obviously, it came after Bitcoin, so the point in time compared to Bitcoin is slightly earlier in the schedule. In terms of distribution, this is one of my favorite things about Zcash, which is it was launched in a time where it was launched in the proof of work type of days, which
2016.
Yeah, which is to say it didn't have these extremely high FTV, low float types of games, and the coin has been basically down only since launch, which is actually really good because it means the only people remaining are the people who actually believe in the project and pick it up on the open market, right? It's also not necessarily available on too many exchanges. Obviously, people will sometimes say, oh, my privacy coin got delisted on this exchange, but Zcash didn't. Well, first of all, shielded Zcash is available almost nowhere. But second, Zcash is also delisted in many places. I know this for a fact because not only did I work on an exchange, I use exchanges, and in certain jurisdictions specifically, you can't get it. And so that is to say the distribution is there's no one with like a giant colossal bag of some fast L1 coin that's going to come out and get unlocks, right? It's quite transparent at this point in terms of what it stands for, but also the activity on exchanges and you would have, and the liquidity parameters across different trading venues and all these different things. There is no secret VC with coins unlocking in 4 years, right? It's also, again, it's proof of work, so it's just distributed quite differently, which I believe would be very interesting for crypto to go back to. There's actually a project on Solana that was doing this that did relatively well for Solana. And so the distribution is, I think, about as good as it can get. Obviously, there's still room there as more people learn about it. And then the other questions were around, there's a few different dev grant type things where certain protocol revenue, so to speak, goes into a lockbox that's controlled by token holders. And the token holders vote. For example, my guess is they would vote on giving some money to Sean and potentially Dev for being like, hey, you guys did this Ironwood upgrade, you're doing Tachyon, you're adding value, and then the token holders fundamentally vote, right? But I think Dev can give a much more detailed answer. He knows all the proposals around this.
Yeah, I mean, Dev, you certainly earned it. Maybe you could just tell us a little bit more, like what is this protocol revenue, and then how does the process work to contribute and reap the rewards of that?
Like I say, process of funding, high level, I think that's for Zonal to the VC raise, Zcash Foundation got a bunch of donations early on. I'm a little bit ambiguous on like the details. I think then one of the big dramas of Zcash early on was that hey, look, we need zero knowledge proofs. We have to do a bunch of updates. This doesn't funding researchers doesn't pay for itself, especially when zero of them have coins. It's fair launched. So we're gonna put some of the block emissions towards like devs. That historically was the founding company. That ended a couple of years ago. So that was 20% of block rewards, which I'm pretty sure it's all sold to go fund development. That now goes into this like lockbox, this like effectively a multi-sig, and that multi-sig has some legal directive to only disperse how token holders vote on it. So Zcash is kind of cool in that we have private token holder voting, where you can have a vote for a couple weeks. Everyone participates in the vote. You don't see anyone's balance or their amount. You just see the aggregate totals at the end. So then you can make a proposal saying, hey, I did X. Please give me like some money for having done it. So there's a token holder voting side, but this is only retroactive. And then there's an upfront side that's managed by some DAO of people that's called like community grants. So these are the kind of two open funding sources.
Got it. So there's no more protocol revenue or block rewards going into this lockbox. This is just the old 20% of the block reward that was instantiated at the beginning of the protocol that has since ended.
So it's still the 20% of the existing block reward still continues to add in, but it's only on this has an end date. I believe the end date is 2028.
Okay.
And then after 2028, people can go re-vote on how to update it. If it should still get more, or end it, keep it all to miners.
Got it. Okay. Well, guys, thank you so much. I think we've got our next guest. Andy's getting him ready in the tokenization tower there in New York. So appreciate you guys coming on, as always, with the updates. We're big believers in the shielded money thesis, and appreciate everything that you guys are doing for pushing forward quantum proof money as a whole. So big shout out to you guys. Thanks for coming on, and I'd love to see you guys again soon.
Thanks so much.
Thanks for having us.
See you next time, gents. All right, guys. I mean, if you don't know, now you know. We are big believers in Zcash. We had people in the comments saying this was a paid segment. Not a paid segment. We're just big believers in Zcash because we see what's happening with Bitcoin. Andy and I have both been around in this space for a long, long time. And a lot of what Zcash is doing now is part of the reason why Andy and I got into this space to begin with. And so we got into the space to begin with because we see the politicians and, this monetary regime basically desecrating our fiat system. Bitcoin was an answer to this early on. And, Zcash has since picked up and continued the Cypherpunk ethos and philosophy and is now programming that directly into the protocol and the asset. So we're big believers in Zcash. We're going to actually have the digital asset treasury company Cypherpunk in the show in just a little while. So guys, stick around. We're going to go to New York. We're going to go live to New York with Andy and Terence from TechDollar, and we're going to be getting into our next segment. Guys, don't go anywhere. Stay tuned. Got a great segment coming up.
Alrighty, guys, here we are back at the Tokenization Tower with Terence, the founder of TechDollar. Terence, good to have you.
Thanks,
Beautiful
man.
day in New York.
Beautiful.
Not a bad look, not a
Could
bad
be
view
worse.
from the boys.
Definitely be worse.
Yep. Man, what a day today in the markets for crypto. I mean, big bounce. You're a finance guy. Our Treasury Secretary, Scott Bessent, decides to go out and buy a ton of long dated bonds to effectively slow this steepening yield curve at the end here. We were seeing some weird dynamics play out where the shorter end of the curve was kind of responding a lot better to inflation, but the long end was kind of screaming a problem. People are calling it stealth QE, Fed intervention, Treasury intervention. Obviously, the coins are responding well.
The coins are responding great. Personally calling it inverse 10-10.
In inverse 10-10.
That's what I liked.
Yeah. I mean, I don't know if you're a QE expert, but it does seem like the early stages of kind of a flipping from a tightening environment to an easing environment here.
Yeah, I'm definitely no expert on the QE, but I do think tables have turned, tides have turned a bit.
Yeah.
Seems like a lot of my friends, myself, are allocated. So looking forward to the next couple of months.
Nice, man. Well, TechDollar is the platform that you've built, a private credit platform that lets employees, founders, and early investors borrow against pre-IPO equity without selling their shares. So I know that we'll get into that. Did you see the Unitree IPO launch?
I did. I saw it on Hyperliquid way before that.
Right?
It was going up only, yeah.
Right. And so it was what, 5,000x oversubscribed or something crazy?
And climbing.
And climbing. And absolutely exploded off of the launch.
It did, yeah. Robotics are a big one for us, so we keep a close eye on all that stuff.
Yeah. I was with these guys over the weekend, and they're basically selling blocks of these pre-IPO companies to large investors out here in New York. So they live in SF. They meet a lot of the GPs of these large VCs, and they come in and they try to find willing buyers here pre-IPO. And I showed them Hyperliquid, and they were like, "Oh shit, man, I might be out of a job soon."
Yeah, many such cases. I think, we've been seeing a lot of those robotics block move for a while. It's actually how TechDollar got started.
Really?
Had a lot of friends and myself invested in some of these later stage robotics deals.
Okay.
And obviously,
Like, which ones?
Aptronic, Figure, 1X, Standard Bots out on Long
Very
Island. Those are great guys. A lot of people were allocating, marked up heavily. Someone's always looking to get out. Someone's always looking to get in. So I'm sure there's a lot more upside there.
Yeah. So you guys are doing some deals, a little syndicate or angel collective or funds, structure. You realize there's an opportunity here for this kind of pre-IPO. There's clearly there's clearly a strong demand for the AI companies, for the robotics companies. So you get to thinking, and this leads you to where you are today. What, from where we are today to, aping 20K clips into robotics companies, where, what happened in between there that kind of led you to want to start this company?
I mean, we started out looking at, like I said, a lot of these later stage robotics deals. A lot of them had marked up quite considerably, but we were basically, myself and a lot of other guys, both on our cap table and not, we're looking at how do we actually get some liquidity out of this? Always the question, right? I always joke about living a very illiquid life. And, in the past couple of years, the answer to that question was running continuation vehicle, playing these LP gymnastics. It doesn't need to be like that. So that's kind of like why we started TechDollar. Initially, it was a product to cater to GPs, liquidity solution, allowing them to keep the upside. And then over the course of the last year and a half, we really found that there's a much bigger market in employees who are owning a lot of these equities. 20% of all these employees, all these companies, are giving away their equity to their employees. It's the largest line item in total comp. So when you look at that market, you look at it compared to these GPs that are just looking to avoid continuation vehicles. It's a much larger considerable piece of the pie. So that's what we're focused on now, lending to guys who don't want to treat their upside, their equity, like a lottery ticket, want to treat it more like a hard asset. So
Right. So the idea of almost like, I'm one of the first 50 engineers at OpenAI, or, and a different frontier lab. And I'm like, I've got this equity package based on the Hyperliquid price or the lighter price or the last round.
Unitree.
Right, exactly. That's worth $6 million. And I'm like, well, I don't really want to sell this now and be like, I sold the bottom of my own company 3 years into the multi-decade long AI revolution, but I want some liquidity. So I come to Terence and I'm like, hey guys, TechDollar, you guys have this platform. here's what I think my equity's worth. You guys maybe give me a price based on what you think the market would give it, illiquidity, discounts, premiums, other kind of risks, et cetera. And then you're able to provide these employees, founders, et cetera, some sort of effectively a loan on their equity that is liquid without them having to sell that equity.
Yeah, that's exactly it.
That's awesome.
You have a lot of early engineers, product guys, marketing people that are staring at, transformative wealth on paper.
Right.
And it's just that paper. You can't do anything with it.
Yeah.
You can't buy a house, can't put down that down payment when you need to. You have to wait for a tender window. So yeah, what we do is running these equity value programs. I like that a lot more than a loan.
Yeah. Okay, sure.
So we're doing that. We're basically coming in saying, hey, we see the last funding round. We're trying to mark to market rather than last round because it can be a bit stale. Obviously, where the data allows that, but across the board, it basically allows us to accurately track things as they mark up. As companies run tenders, company goes from 40 billion to 70 billion. We can add more credit to the borrower. So it's very intuitive, and it works very well in parallel with these tenders, which help us price things.
Yeah. And so, okay, so then who is, where is the capital coming from to provide the liquidity to these employees, founders? And then what is the approximate set of ranges of interest rates or what I can if I'm the founder, what am I expecting to kind of pay to get this service?
Yeah, so it really varies based on the collateral.
Okay.
The liquidity, I'll start there, comes from a couple different avenues. Right now, we're live on the liquidity side. So we've been filling a lot of loans just with forward flow, coming to agreements with private credit groups, private credit funds, high net worth individuals that want exposure to these assets or already have exposure. Everyone kind of has been dipping their toes in robotics, chip adjacent infrastructure, compute, quantum compute, like I was just talking about. So they already have a lot of these equities on their balance sheet, and that gets these lenders very comfortable with providing liquidity to match these facilities. Now, when it comes to rates, we built the product to be very competitive in a landscape where there's not much competition, to be honest.
Right.
Unless you're a founder, and even if you're a founder, you call up a bank. If they even pick up the phone, they'll decline to price it outright, or they'll give you a 20% coupon, 20% of the value of your equity. I personally thought that was quite bad.
Yeah.
I would never take that deal. So yeah, we look to price things anywhere from around 80 basis points to 1.5% a month. It's cheaper than most Amexes. So it's pretty good, and all things considered, considering you get to keep your upside and continue to build onto that value you've already created.
Yeah, and so if I'm a liquidity provider, a high net worth individual, a private credit fund, investment bank, or a firm, what I get by coming in and being like, I want to provide $10 million into TechDollar is I get to select which, I call them loans, you call them equity
Value program.
Equity value program. So I get to choose which equity I effectively want to purchase.
Yeah, so we don't allow individual, let's just call them LPs, to come in and steer capital between actual specific facilities.
Okay.
What we do is we allow them to pick and choose verticals. In some cases with forward flow agreements, some range of underlying. So maybe you're one that loves robotics, right?
Right.
I get 10 loans from a robotics company, or I have a company-wide equity value program being ran.
Yes.
I will pass all of that opportunity on to you, and our LPs get to earn low to mid-teens pass through, which is quite good considering the yield on chain right now.
And do the LPs own the equity after the deal is done?
No. So in the event of disposition, default, we handle all the settlement. So TechDollar basically acts as an origination platform, an underwriting platform, a monitoring platform through Caplight partnership on the data side, and so servicing covers everything from getting the loan started to getting it closed to Andy doesn't pay back his credit facility, and now I'm going to go sell the thing through our network of broker dealers and settle that same day, so that there's as little risk or opportunity cost loss on our LPs. Yeah,
exactly. And then we're on the precipice of the Anthropic IPO, the OpenAI IPO. Obviously, SpaceX came and went, and then a whole behemoth of other kind of, let's call them innovative technologies IPOs. Probably not as big as those two, but still going to be quite sizable, I think. When that IPO happens, what changes in that? I'm the LP providing, my 10 mil in the AI sector. And obviously that includes OpenAI and Anthropic, a couple employees from each, let's say as an example. What is that? What happens at IPO day?
Yeah, so we try and price all of our facilities such that they are aligned with that event, that liquidity event.
Sure.
We don't lend against anything that's public. So in the event, say Anthropic goes public tomorrow, and you're lending against a bunch of basket of Anthropic employees, or TechDollar's running an equity value program there, the loans get wrapped up. So we basically settle everything in advance. We'd know obviously when the IPO date is, the same way everyone else would. We don't hear anything in advance. But when we do the underwriting process and we go about actually looking at providing someone a facility, what we really try to look towards is what is that merger, that acquisition, that liquidity event, that IPO date, such that there's no lack in like alignment on the timing side.
Got it. Okay. So just to be clear, when I put capital up, I'm not getting any of the equity from any of these deals. I'm just getting I'm getting a nice interest rate.
Yeah, as friendly as like the new SEC guidance is, and we've been working very closely with them, it would be a nightmare for everyone involved.
Yeah.
It's quite easy, just to settle things. If I had a borrower and hey, big surprise, it goes Unitree's public tomorrow, we would just close the facility up, or we could bundle it up and sell the whole package to another, licensed party.
Yeah. Very cool. Very cool. How's the growth been? Has it been this is relatively new, right?
Yeah, we just started in March, a little earlier actually. Myself, my co-founder David, were building this, I want to say last August, September was when we got the ball rolling.
Yeah.
And then we, brought in some external capital in April, May, June. And since then we're just scaling up the origination side. So TechDollar is live. You can come in, apply for a loan. Soon the liquidity side will go live. We've been spending a lot of time building out our legal moat, working with regulators, us really establishing a strong foothold there. So that way once, guidance does come, we can be in a really good position. But yeah, we've got over 300 companies, I think we announced today, that are capable of, unlocking credit for borrowers. I actually think that number is going to be closer to 900, like on the car ride over here. I'm pretty sure we just added a lot more on the back end, and we're actively adding them day by day. Soon we'll have some self-service opportunities. So if your company's not on there, you'll be able to add it.
Yeah. Very cool. And when you think about kind of the persona or the, when I was spending time with these guys, I felt like I was in an episode of The Big Short. I was like, yeah, we got this block and we're closing this deal and like we're making this commission, and felt like that one scene where it was like, wait, I don't get it. Why are they bragging? It's like, no, they're not bragging. I don't know what the punchline is, but it's something like, no, they're not bragging. When you think about like just like the scale and the speed as to how big this AI and robotics kind of build out has become, and the persona that you guys are dealing with on the provider of the equity of these companies, founders, employees, et cetera. And then you've got this kind of, high net worth investment banks, whomever kind of on that side to kind of make this market. What is your 10X here? Like, what is your, you have 300 markets, 900 soon, couple $1 million, tens of millions of dollars of deals being flown. How do you get this thing to like billions of dollars to be able to be like almost like a broker for any, large company looking to go public, people that have equity in these things wanting to get that credit? How do you kind of think about scaling that?
Yeah, so this is something we spent a lot of time on. So far, a lot of our borrowers have been very white gloved by myself, my co-founder, and our sales team.
That's what I'd imagine.
It's very cost intensive,
it's
very labor
based.
intensive. Yeah, exactly. Very relationship based, and that's okay when you're starting out, right? It has to be very high touch. Have to spend a lot of time talking to customers. But now, what we're actually getting at, and why I'm shilling this equity value program today, especially you, is our scaling path is how can we reduce that time spent on white gloving all these borrowers? And the answer is becoming embedded alongside your 401k, your dental, your vision, your healthcare, as an equity benefit, as an employee benefit. TechDollar has the potential to be one of the only employee benefits that's just as beneficial to founders, board members as it is to employees and investors alike, right?
Yeah.
The problem with these guys that are walking around bragging, shifting blocks on your head, is basically that they're fucking up the cap table. They're really
they're restructuring the hell out of it.
They're putting it everyone's going for a loop there. You have names that you don't know. You have founders that don't know who owns what.
Correct.
I saw this Anthropic news ages ago, which was, hey, everyone's rolling everything into an SPV. That was happening because you have these employees staring at 7-8 figures of wealth, and they've got a bunch of guys like your friends that want to move blocks.
Right.
There's always a willing buyer. There's going to be a willing seller, whether these founders, these boards like it or not. And eventually, they clamp down on this SPV angle. So for us, moving forward and getting to a point of real velocity here is us not even having to sell the thing. We'll never be a broker, never be a dealer.
Right.
And not just saying that, like I really do think the best way for our business to scale is to stay capital light, right? Have other people sell this thing because it's good for them. That's how the best products win. So what we're doing now is going directly to companies that run tons of tenders, companies that haven't ran any tenders, companies that have raised at an enormous speed comparative to everything else. And we're basically saying, hey, next time you go to run a tender, maybe you should think twice about it, because if you go out and you spend $100 million buying back shares from your employees, 30-40% of that's going to go to taxes.
Yeah.
So it'd be way more capital efficient if you were to take that $100 million and allow your employees to access a revolving line of credit collateralized by the equity that you're already agreeing to provide and to buy back.
Yep.
So that's how we're going about it now. We're working with a lot of companies to, waive these transfer restrictions in advance. They're actually waiving it back to themselves, essentially. They're, creating an excluded list of funds, where they, in the event of disposition, in the event of default, they know that us as a group sitting in the middle of our borrower and our lender is not going to go out and sell it to a wrong party, not going to go wrap it into SPVs.
Right.
The way to get companies comfortable is to make sure that it makes as much sense for them as it does, for their workforce. And that means being able to, have your employees not have to sell the thing because they want to make a difference in their lives.
Yeah, exactly. I mean, it's the best of both worlds for them.
Yep,
or so
exactly.
it seems, at least. I mean, I'm trying to figure out what the kicker here is.
Yeah. Win-win product. We've spent a lot of time, trying to make sure that was the case.
Right.
I've seen too many products, not just in crypto, but like in broader fintech, go the wrong way. Just don't think there's a reason for it. Like, this can be a very win-win scenario. People are always going to sell whether you like it or not.
Right.
So might as well support the better outcome for everyone, which is, hey, this guy can access the cash. And if he doesn't pay it back, company gets to clean up the cap table at a much discounted price, right? Because if you're lending at 40-60% LTV, your employee doesn't pay it back, that means you're getting your shares back at a 40-60% discount.
Correct. Yeah. And so when presenting that concept to these companies, that's something that they understand and that they kind of buy into.
Yeah, very receptive. I mean, it doesn't cost anything for them unless they're running the program themselves. Obviously, that's our end goal. It's what is best for everyone, having these companies provide that capital, run the program themselves, rather than having even an external lender come in. But obviously, the demand is there on both sides.
So I was talking to the head of the private credit sector, or like the head of a kind of subsidiary of Franklin Templeton yesterday about tokenizing a lot of the private credit work that they're doing. They kind of are facing both a liquidity problem currently, but also a kind of just a delay in settlement times, a delay in being able to get deals and loans, even just getting a loan to the market for them takes 15 days. Yeah. Right. It's just like, what the hell are we doing?
Yeah,
right.
It can be much longer. When we were first getting things started, myself, my co-founder, were calling up tons of banks on the East Coast, the West Coast, basically pretending to own 8 figures in equity, even pretending to own less.
Yeah.
And we would get quoted, if we got quoted at all, 4 to 5 weeks for a pre-quote.
That's what I mean.
It's crazy.
It's like just to get a quote, not even to do the deal.
No, it makes no sense. So you're going to take 3 months to get the actual money in your bank account. You might as well wait for the tender, because your house isn't going to be waiting, right? You're going to have the guy next door buying it from you. So yeah, it's super interesting. We're trying to move faster. Right now we can do this in about 24, 48 hours.
Wow.
At least kickstarting the underwriting process. What we've been doing so far is working with RSM, top 10 CPA firm. They look at the shares. They make sure, hey, this is enforceable. And then we spend the remainder of our time going direct to companies, getting approvals, and mapping out the best path forward.
Yeah. And I mean, the kind of kicker to what this guy was, thinking about was, okay, how can we tokenize some of these private credit vehicles themselves to be able to offer other investors easier access to get in if they want, or add a better liquidity profile to this instrument, as well as, just kind of like broadly make the underwriting and the quoting process much faster. So it's kind of like a bit of fractionalizing in a sense, and then also just, removing this very, very inundated process. Yeah. And so, when I started talking to him, I was like, well, we have guys, we'll take a quick break. Okay. And so through this process, we, came to come to a conclusion that there is a illiquidity premium that is attached to private credit, that they're marked to market once a quarter. It's kind of like a nice thing because, well, when shit hits the fan, it's still 100 points, 100 points, 100 points. It's like there's kind of this advantage, if you will, to having an illiquid asset, which kind of sounds ass backwards because for most investors, you think liquidity is the advantage, but it's typically actually the other way with private credit because for a variety of reasons, it's easier to kind of mark these things only, once a quarter, redemption cycles, et cetera, et cetera. When it comes to this kind of product mechanism, if you make these open AI shares more liquid, if you make these employee shares of Snapchat pre-IPO more liquid, if you make these robotics company shares more liquid, do you feel that there's going to be, well, I think undoubtedly there'll be a better market price for what these are actually worth based on the demand and supply of them. But I guess what I'm trying to say is like, there's been kind of like this big bubble of like, oh, this fundraise and this fundraise and this fundraise. But what you're saying is like these employees are looking at this fundraise and looking at their check go like this and being like, all right, guys, like I know what's going on inside this company. Like, I don't know if we're worth 3 times what we were, 6 months ago. So I guess what I'm trying to get at here is by adding more liquidity, do you feel that there's like A, I guess a more fair market force, but B, kind of could put a pop into all of what's happened with this kind of like illiquid markups based on kind of adding more VCs to the cap table? Do you kind of see?
Yeah, I get what you're saying. The question is always, you're injecting more liquidity in the system. Are you leveraging up the thing?
Right. Or are you like leveraging it down and showing like
exactly? Are we letting
true
employees
values
hedge their downside? I think the question is actually rather, what is the difference in them hedging their downside borrowing versus them hedging their downside and selling the thing through your friends flipping OTC blocks? Now, if I'm going out and I'm selling the thing, I would argue that, I've got a new counterparty on the cap table. I've got a new buyer at that price. It's probably going to heat things up a bit more than someone borrowing at a 50% LTV, right? It's not like we're offering some crazy amount of leverage, no 99% LTV for your pre-IPO equity yet. But at the very least, what we're doing is providing a good data point, right? Like you said, a lot of these private credit marks are quite stale. That's kind of like a double-edged sword. It's a good thing, it's a bad thing.
Right.
It's great in a bad market. You can turn around and say, oh, we don't have a mark till next quarter. It's pretty bad in a bull market. You can't, watch your company run a tender and then suddenly you want more credit, but you can't have it.
Right.
So it's good and bad. What we're trying to do is kind of sit in the middle and, narrow that spread a little bit, tracking things, like I said, to live secondary pricing.
I love it.
And keeping up.
Terence, man, I know it took us a couple of times. I had quite the stomach bug from an Argentinian
I'm glad
ski
you're
trip.
feeling better.
I had a great steak and a lot of skiing, and it kind of got the best of me, some wine as well.
Embarrassing.
But thanks for coming out. Congrats on the success. This is awesome. Right place, right time, innovative idea. So wish you the best. And thanks for coming out.
Appreciate it. Thanks, Andy.
Yeah, cheers, guys. All right, guys, we're going to be back with our next guest, Will McEvoy, on Zcash, privacy mining, and more. And we also have tons of markets, charts, news. We got a massive news hearing at 2:30 starting with Trump, with the Winklevii twins, with Sergey from Chainlink, and a bunch of other leaders in the CFTC, in the digital assets and tech industry. We're going to stream that live right after Will. Then we're going to go through what happened today, markets, charts, news, and more. Don't go anywhere. We'll be right back. Robbie's going to hop on, and we'll get Will up.
We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Yo, what's going on, guys? This is Itan with the Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're going to have people...
All right, so for everyone that just got a lesson in the bond markets, this is what we're watching. Besson is buying the long end at a discount. He is selling the short end at a premium, and we're getting a lesson in yield curve control in real time. The money printer's on, and we have Will McEvoy, who is the CIO at Cypherpunk. That is a Zcash digital asset treasury company, who's going to be joining us on the show in just a few minutes. Today is all about Zcash. Just had a fantastic segment in the tokenization tower with Andy and Terence. I believe Andy is getting ready again as well. And yes, we believe in the Zcash thesis. We've talked about this. It's also flying today. I mean, it's at $550. You guys have not seen what this thing can do, especially if you recall back in 2016 when Zcash first launched. It has not been in price discovery since. The last time Zcash was in price discovery was when it first launched on Poloniex in 2016, and it was trading at about 7 Bitcoin for 1 Zcash. That's right. When Zcash first launched, this is a little Zcash lore for you guys, just because we've been here for a while. We've seen a thing or two because we've been around a little while. When Zcash was last in price discovery, people were pricing it at 7 Bitcoin to 1 Zcash, literally calling for it to flip Bitcoin. Obviously, it had an extremely overhyped launch, came back to reality, but it was actually priced at over $1,000.
Oh, the OG days?
I mean, dude, Zcash was at $1,000 back in 2018 when Bitcoin was 20K at most. So this thing has gone on insane runs before. It has been in price discovery before, but it's been almost a decade that this thing has been in accumulation. Almost a decade of this asset changing hands from paper hands to diamond hands.
And down only too, right? Like, that's what Mert said. It just,
especially
against
relative
Bitcoin.
To Bitcoin. Yeah. Cause I mean, this thing started out 7 Bitcoin to 1 Zcash. People, when this thing first came out, people legitimately thought that it had a chance of flipping Bitcoin, which is why now you have people saying like buying Zcash at $500 is like buying Zcash or like buying Bitcoin at $500. People think that's a meme, but a decade ago, people thought that was a reality. And so this is
did we
sort
get
of
the
like
wrong
the
Mert
version.
on the profile on the design today?
No, you're just tweaking.
Okay. I think it looks just like him.
I think so too. We're gonna bring Will
But
up.
he said we made it with AI.
He said the pick was from 4 years ago. If you guys can't tell, Andy's a little euphoric today.
Oh my God. Guys, what's the market doing? Little Miss Gun, GM, great to have you as always. We're going higher. New Type, great to have you. Freedom Guy, New Type, Shine. Yeah, you guys are the OGs. You guys are part of the show every damn day. We love y'all. You guys are the best, man. Rob, that meeting just started, 2:30. So we're going to chat with Will, CIO at Cypherpunk. Today's like the Zcash day.
Oh, yeah.
Things ripping. Chainlink above 10. BTC 68.25. Hype 62.4. Pump at 30.84. I don't know what that is. Per 7.9. Zcash 550.
I mean, we can talk a little bit about where we might go from here. I do think we're going to get a pullback. I mean,
today was a lot.
People are calling this the bottom. I could see it. Honestly, I could certainly see it. I mean, with the amount of liquidity.
So good if it was the bottom.
I mean, with the amount of liquidity supply that, we're getting injected into the market.
I mean, you said that they're buying those bonds till
$4 billion. They doubled the amount that they had previously done, at least doubled. And they're doing that until November, early November.
Every day they're just T-whopping bonds.
I think it's every week they have treasury auctions. But they're absolutely T-whopping. And the theory is that when this program expires in early November, it will actually open up an opportunity to announce an even more aggressive yield curve control liquidity supply program. Right now we went from 2 to 4 billion, and who knows? We could go from 4 to 10. Who knows?
Hype looks insane, guys. Looks ready to go on another run.
At the very least, we know that now this is like volatility has returned. Open interest was massive. A ton of shorts got liquidated. Even if the price isn't going to just move up only now, we're going to see volatility now re-enter the market, which I think
the regime, at least in the short term.
Exactly. And I think if you're bullish just on volumes, like volatility tends to lead to volume,
which is bullish for our revenue meta tokens. Pump, Hype, Lighter, Near Intense.
Exactly. Anything that generates
Chainlink.
Fees, anything that generates fees on volume and activity
on life
is now going to do well because there's more volatility, more volume, more activity. Means more revenue, more fees, and more value accrual.
Zama is better in every way than Zcash. Completely different protocols and ideas. I like that Zama is basically bringing what Zcash is bringing just on its chain to any EVM. I think that's but that's a conversation for after Will, because I think that is going to be a good one. Because the question is, do you? Yeah.
I mean, I would call it how it is, if just by analogy, that Zcash is to Bitcoin like Zama is to Ethereum. Like, these things feel very similar in the sense that Zcash is
they're complementary, really.
They certainly are. I mean, Zcash doesn't have it doesn't have a smart contract layer. And what Zama does is bring confidential smart contracts and applies that to
programmable money, basically.
Exactly.
Or so programmable Zcash, applications.
I mean, look, we've been here for previous cycle. We've been here a long time. We've seen Bitcoin and ETH do extremely well in their own right. Zcash and Zama can both do extremely well in their own right. And if you're bullish on privacy, why wouldn't you want to own both?
Send them all. Let's get Will up here, CIO at Cypherpunk. This guy's fired up. Will, good to see you, man. How you doing, man?
Good. It's good to be back. We had a lot of fun last time, so I'm happy to be back and to cover everything Cypherpunk and Zcash.
Yeah, man. Congrats on the announcement of the Bitcoin or the mining rigs that you guys have absolutely just. You guys looked at those AI, all the data centers, and you're like, nah. Or, whatever you can do, we can do better. We're gonna mine Zcash. Still early, looking to get to that 5% mark. Will, maybe just kind of give us a bit of a rewind here. Like, how did this choice come about? Why was this the best choice for Cypherpunk? Why does this make sense? Why do you guys have so much conviction in this being the path to accumulate more ZEC? Give us the kind of leadership inside the room of the boardroom here as to how you guys came to this plan.
Totally. Yeah. So yesterday we announced Cypherpunk mining. We are, by our sort of analysis of the network, the largest Zcash miner. We have about 4.2 gigasouls of hash rate. There's just over 20 gigasouls right now. So that's how we get to sort of this 18% of the network figure. And And from our perspective, the way that we framed and got a lot of conviction around Zcash mining is really through two framings. The first one was that if you compare Zcash mining from a revenue perspective, really a revenue per megawatt hour perspective, it's obviously more profitable than Bitcoin mining. And you've had all of these Bitcoin miners convert their sites to become AI co-location sites, right? So you take all the Bitcoin machines out, you retrofit your facility to then allow a hyperscaler or some sort of other AI company come in and plug their GPUs in. And we did the math, and again, we found that per megawatt hour, Zcash mining brings in more than both Bitcoin mining and even that sort of AI co-location play. So that gave us a ton of confidence in it, in Zcash mining. And then we also just compared Zcash mining to other regimes of Bitcoin mining, right? So if you go back to Bitcoin mining in 2016, Bitcoin from a market cap perspective was very similar to Zcash today. It's, sub 10 billion. And the mining economics are similar. At the time, Bitcoin mining was bringing in about $300 per megawatt. And today, we estimate that the Zcash mining is bringing in about $450 per megawatt. So those two framings gave us a lot of confidence. We spent a lot of time thinking deeply about Zcash mining and investigating the supply chain of mining ASICs and so on. And then it's been super exciting to announce it and announce the transaction with Winklevi's Capital.
Yeah.
That brought the fleet into Cypherpunk.
The fleet. Yeah, absolute fleet.
So tell us a little bit more about this deal. We actually just had Mert and Dev, two guys that are just extremely deep in the Zcash ecosystem, talking about the progress with Ironwood, talking about what's coming up with Tachyon, and just kind of giving, our audience a little bit more of a crash course and a technical deep dive. We talked a little bit about, this miner coming online, but maybe you could tell us a little bit more backstory about how this deal ultimately came together.
Yeah, so the deal is a all-stock deal, specifically warrants between Cypherpunk and Winklevi's Capital. Cypherpunk contributed $33.33 million worth of warrants in exchange for 4.2 gigasouls, which comes out to just under 5,000 of the latest and greatest Bitmain Z15 Pro Zcash miners. And so those are sort of the contours of the deal. We spent a lot of time digging into the supply chain for Zcash ASICs, and what we found was, this is another reason why we really like the opportunity. What we found is that it's just an extremely slow and bottlenecked supply chain, right? So today you can go out and you can place an order for 5,000 machines, and I think you'd be really lucky to get them plugged in within 7 months. And I think for most operators it will take longer than that. Typically, manufacturing cycles can take longer than anticipated. Getting the machines into the United States from a transportation and logistics perspective also takes time. And then you also have to find a really high quality site to plug them in at. So I spent the last several months deep on the ground visiting sort of what we view as best in class hosting sites around the country with that we could have confidence that would have extraordinarily high uptime, close to 100% uptime, and also super competitive hosting rates. So those are the types of sites that we looked for, that we plugged our machines into, and those hosting contracts and relationships came over to Cypherpunk in addition to the fleet itself.
Love it. And I'm curious, your bet here, what is by selling warrants of the Cypherpunk equity at future prices, right? I'm sure there's specific, you can read in the 13F or whatever it is. What is the bet that you're taking that you previously weren't taking?
So one, there's just a massive opportunity to secure the Zcash network, right? It's extremely profitable from a return on capital perspective, and if you were to sort of analyze the fleet from a payback perspective, it's extremely competitive or compelling in its own right. The way I also view it is if we can increase the security of Zcash, the network, then our underlying treasury automatically becomes more valuable, right? A more secure, a more decentralized, I would even argue a more US-based Zcash mining network just drives value to Zcash and ZEC specifically, which we hold over 300,000 tokens. So I think it's a strong synergy. I think there's also just another way that I think about it is that we historically there hasn't been a lot of great communication between the miners and the rest of the ecosystem.
Sure.
The miners are a critical part of the ecosystem. They need to have a seat at the table in conversations around network upgrades and what's happening, amongst the wallets and nodes and so on. So I think we're going to bring that sort of level of communication and commitment to the network that miners historically haven't. So in many ways, I view this bet on mining as synergistic with our ZEC treasury.
Yeah. I mean, what a move today. I mean, geez. I mean, nice little Wednesday pop for the old Zcash holders. When you're thinking about kind of the institutional access points to Zcash, I mean, I think Grayscale has like a trust right now, Zcash trust. I don't know if it really has much, trading volume. And right now, the only way to get access to Zcash in like a brokerage account, if I'm not mistaken, is basically to buy Cypherpunk, right? So when you think about, maybe I'm mistaken.
That's my understanding.
Yeah. So when you think about like your role as the CIO, like, am I wrong to think that a lot of your job is going out with, the help of the Winklevii and others and just trying to talk to the biggest and largest investors in the world and Zcash pill them? Like, is that not the highest leverage thing you can be doing with your time right now?
I think so. I think you make a good point there. And because it's something we've thought about a lot. Like, we can make, we're going to make some really great bets in the privacy ecosystem, right? Where we can buy all the Zcash that we want. But at the end of the day, our role is very much educational, right? We need to be out there, and we are talking to some of the largest investors in the world, educating them not just on Zcash, but look, privacy is very important, right? We talked about this last time I was on. We're at the tail end of this downtrend in privacy, right? So individuals, investors, institutions, over the past 20 or so years, they've really, I think, forgotten about the importance of privacy, not just in terms of technology, but at like a deep societal level. So it's educating investors on the importance of privacy, on why Zcash is a very compelling option in terms of getting privacy exposure in your portfolio. And then just sort of getting the ball rolling on sort of what else could be valuable in a world where privacy goes from being sort of overlooked and undervalued to a world where privacy is actually like very core to everything, and you need exposure to it.
Yeah. And Will, do you think that there's any potential bottlenecks, on the technical side or, kind of the narrative violations that you think Zcash might run into as you're talking about this more with both institutional investors, people coming over from other ecosystems? It feels like there's a lot of potential flow and capital out there that has yet to come into the space. But, is it just a matter of time? This thing is slowly, then all at once? Or do you think that there is still a reason that so many ecosystem investors are still sidelined?
I think it is sort of a building of momentum, right? And I think it's just going to become more obvious in your day-to-day life how important privacy is. So when we launched Cypherpunk last year, we had a Twitter Spaces, and one of the things I mentioned was that I felt strongly that over the next 12 to 18 months, everyone would be walking around with cameras attached to them, or they're wearing cameras in some capacity.
Or like the little AI thing. They put the AI thing under their shirt that is like recording every conversation.
The little AI pendant, or the flock cameras that I'm sure you guys have heard about.
Yeah, 100%. I mean, I think that's a really good example. The flock controversy, as it were, is a good example, I think, of people waking up to surveillance and the importance of privacy. But just on the sort of wearable tech, like, I think that was a weird concept a year ago. But now, like, you have Apple leaks point to the fact that the next generation of AirPods are going to have cameras in them. So, I don't know, walk down the street and count how many people are wearing AirPods. Fast forward a year, and I think all of those people are probably wearing, AirPods with cameras in them. So I think as just across society, as we start to realize that we're sort of all being surveilled, all being watched, you're going to want some sort of reprieve from that. And Zcash is the monetary asset that you can buy to get that reprieve. And then again, I know that there are a lot of other technologies and companies that you're going to want exposure to also once that light bulb goes off. Which again, I think the flock protests are sort of an example of that.
What else do you put in this asset class? You mentioned that there's like other assets that you're going to want to own if you believe in privacy technology and you believe in this asset class. What else do you kind of bundle up with, the privacy investment thesis?
Yeah, so without getting like too specific, I do think that you're going to, there's a privacy technology or a privacy focused business offering services in every sort of avenue of your life, right? So Zcash addresses financial privacy. Financial privacy may be like the most important part, because like if you buy something, sure, that's like, one transaction. But from an information perspective, it tells a whole lot about you, right? It tells, what you're interested in, what you like, what you don't like, where you go, the time you go, right? And these are all the reasons why Bitcoin being transparent as a store of value or a means of payment are sort of difficult to wrap your head around. But yeah, I think there's a lot to do in sort of the private internet browsing space and the VPN space. I think there's a lot of interesting developments happening amongst mixed nets and maybe in alternatives to VPNs. I think there's a lot of space to sort of work on more private enterprise applications, or even things like a more private and secure version of like Google Docs and Sheets and so on, and then of course super secure messaging and communication apps, which I think Signal does a pretty good job of today. But I think there's a lot to be done from like a distribution perspective, in addition to the product.
Yeah. Do you think that message will resonate with people that have a lot of money? Do you think the Zcash message will resonate with people that have a lot of money?
I think so. I mean, I think if just take Bitcoin whales, for example. If you hold a lot of your capital in Bitcoin, people can just sort of monitor what you're doing with that capital.
Yeah.
Right? They can monitor that maybe you just went and, you just did this big transaction. And then maybe they can sort of like simultaneously combine it with, like using AI, they can combine it with other data on you, right?
Yeah.
things you're posting on X and Instagram and so on. And they can probably much more easily figure out that, you bought a house in this neighborhood and now you're sort of doxxed. I certainly think I see both. I mean, I think there's a sort of a bottoms up way that privacy gets adopted. I also see a pretty compelling top down. But at the end of the day, privacy is important for everyone. I mean, as Americans, privacy is a precondition to all of the rights that we value in the Bill of Rights. You can't have freedom of speech if you don't have privacy of thought, right? If the government can just sort of know, or anyone can sort of just know what you're about to say before you say it, they can pretty easily cut you off from exercising your freedom of speech. So I think, it's important. It's important for everyone.
Yeah. And with a lot of the technology that you talk about today, a lot of it is predictive and will almost prevent you from, or protect you, depending on, what perspective you're looking at it from. But before you even act out, which is kind of what you're saying, they're preemptively putting a stop to some of those rights before you even commit, some sort of violation of those, just by, some sort of predictive analysis that is being run by these cameras, plus algorithms, plus other wearable technology that you're talking about. And it just feels like as prediction algorithms and, AIs, effectively part of that, as well as surveillance technology becomes just more ubiquitous, more abundant, and continues to accelerate, it only poses more and more of a threat. And I think, a lot of people see that, a lot of people realize that, and they're going to be looking for a way out. And so you guys provide a vehicle for people to access, this asset. A lot of people on chain are able to sort of, use various protocols to access this ecosystem, near intense, swap in, swap out. But when it comes to more regulated venues, you guys are sort of the go-to right now. And so I'm curious about kind of the corporate structure of Cypherpunk in particular. We actually have our intern in the chat sent us a little screenshot from Taiki Media, friend of the show, says that he's unsure how you guys calculate MNAV. From his calculations, should be around 1.2, which means that you guys might be considering ATMing new shares to buy more Zcash and get closer to 5% of the network goal. Is that sort of on your radar? Is that a fair calculation of MNAV of Cypherpunk at the moment, around that 1.2 mark? What do you guys do when you're above MNAV? Like other treasury companies, we've seen them hammer the ATM, raise some cash, go use that in the market to buy more Zcash in this case. Is that something you guys are considering doing at Cypherpunk?
So I think MNAV, there's a lot of issues with MNAV just if you're like a treasury company. You're sort of alluding to can be very complicated. Like what shares do you include and what assets do you include if you have, cash and so on. I think now, we've transitioned into not just being a digital asset treasury company. So I sort of mentally am not really paying attention to MNAV. MNAV makes sense if you just have like a single asset and you're accumulating more of it. We have a lot of Zcash, that's true. But now we have a core operating business that is highly profitable. We also have a venture portfolio starting with Zodl. I don't view MNAV as being super helpful in terms of valuing us today. From just a general fundraise perspective, I think we've now transitioned into this point where we think about fundraising like any other company with operating cash flows. When it is opportunistic to raise capital and to put it into to make investments that drive shareholder value, we'll certainly do that. But it's definitely not as simple as are we trading above our the value of our ZEC treasury anymore?
Very cool. I've been holding hyperliquid strategies, and the MNAV swings are really just they're hard to deal with when you see the asset going down, and it's like a leverage bet. It goes up, it's like a leverage bet. But But I guess you didn't really answer the question, Will, if I'm being honest. Are we buying more Zcash soon, or is that not allowed to be talked about? What's your kind of end of the year roadmap look like?
Well, for mining, we are going to be accumulating a ton of Zcash just from the mining business, which I'm excited about.
Yeah.
We're accumulating Zcash at our hosting cost,
Right. Which is great.
Is a significant, significantly more accretive actually than
Right.
going out and buying it at 550. We're still very interested in buying Zcash at spot though. I think now that we have this additional operating business, and it's going to be one of what I expect to be many, we're going to be extremely opportunistic in terms of, when we're accumulating more ZEC with cash. So to answer your question, we're still very much interested in buying more Zcash, and we have this great mining engine that will be driving more ZEC into our treasury too.
Well, I think your previous answer also just provided a lot more insight into the way that you're operating this business, and it separates and makes it distinct from other digital asset treasury businesses that have, to use your words, like a one asset business. They buy ETH or they buy Bitcoin or they buy something else, and that's all they do. And in very few cases are they contributing to the network in some way, shape, or form. Whether at the most minimal case, it's staking that asset that they bought.
Yeah.
And in more, extreme cases, you are doing what you're doing, in which case you're mining, you're doing these other things, you're invested in the sector, the category as a whole, and ultimately bringing about, kind of this, well-rounded thesis that you've talked about here today. I'm curious, because it sounds like the mining business is pretty fundamental to Cypherpunk. Maybe you could just walk us through the mechanics a little bit more. Like, what is the revenue story? You mentioned it's essentially at cost. Like, what is sort of the flows that you're seeing? Obviously Zcash is proof of work. You're mining by contributing this hashing power. I saw the next Zcash halving isn't for a while in 2028. So the block reward should be pretty juicy. Can you just describe like what it's like to be a Zcash miner today?
Yeah, 100%. I mean, a lot of it is in the details in terms of like future hash rate growth, future price growth. You have to spend a lot of time thinking about how you model these things into the future. But today, just sort of if you back into it, using sort of the figures that we've been public about, we're mining hundreds of ZEC per day. If you were just to look at sort of industry-wide hosting rates, it's something like 6 to 9% per kilowatt hour. And I think what you'd back into, again, because we haven't announced these numbers, is you get very compelling gross margins, right? Again, if you were to sort of think about it from the perspective of, if this is, from a revenue perspective, twice as generative as AI colocation, you can sort of imagine how profitable it is today. In the future, hash rate's going to grow. We feel like we have a good sense of where hash rate is going to grow to, based on sort of the supply chain for Zcash miners. Again, we're going to be looking to increase the size of our fleet too. So overall, it's a very compelling opportunity that we're excited that shareholders now have access to through Cyph. And it has the ability to be even more compelling if Zcash continues to run from here, which it looks like it's having a good day today. But we'll see what the next several months look like from a hash rate and price perspective. But it's a super compelling opportunity, and yeah, we're just super excited to bring it to Cypherpunk.
Love it. Will, congrats, man. Thanks for your time as always. Big bulls here, and love this announcement. Love that we're getting just a bit more homegrown mining for ZEC. And you guys are thinking about things in a very unique way as far as ZEC per share. So first that we've heard of this from a acquisition company, and curious if this sets a kind of a new standard from some of the proof of work networks. But my intuition tells me that proof of stake doesn't really give you anything close to the level of accretive nature that mining does in proof of work. And well, the only other proof of work network really worth mining these days, other than Bitcoin, seems to be Zcash and maybe a couple others, but not many of those have digital asset treasury. So unique position, unique time. Wish you the best, and thanks for your time.
Cool. Thanks, guys. See you soon.
Thanks,
All right,
Will.
Will.
We'll see you next time, man.
Cheers, buddy. Alrighty, guys. Bullish. What a day for the markets. What a day for privacy. What a day for crypto believers, for hard asset believers, for fiat as a zero believer. Just a lot of believers out there winning today. Guys, we're going to take a really quick break. We'll be back in a minute or two. Take a quick breather. We got a bunch of news, tweets. We got the White House live. President Trump is going to deliver remarks with technology leaders live. Some of those will be crypto leaders. I'm sure there's going to be some sound bites here. We're going to react to that. We're going to cover some news. We'll be right back. Just a second.
We get